Hong Kong Stock Exchange Directors Training. Responsibilities of directors of companies listed on the main board of the Hong Kong Stock Exchange. 17. Corporate governance. Requirements for independent non-executive directors. Independent non-executive directors must make up at least 1/3 of a listed issuer's board. The minimum number of independent non-executive directors is 3 independent non-executive directors, and at least 1 independent non-executive director must have appropriate professional qualifications or accounting or related financial management expertise. The listing rules provide guidance such financial expertise entails, but ultimately it is the responsibility of the board to determine on a case-by-case basis whether a candidate is suitable for the position. In assessing the independence of a non-executive director, the exchange will be likely to question the independence of a candidate in the circumstances below. A. The director holds more than 1% shareholding interest, whether legal or beneficial, and including any rights to call for the issue of shares in the listed issuer, or if he has received any shareholding interest as a gift or by means of other financial assistance, for example a loan, from the listed issuer or its connected person. A director holding a 5% or more shareholding interest will not normally be considered independent. The director is or was a professional advisor to the listed issuer, its holding company or any of their subsidiaries or connected persons, or to any person who was a controlling shareholder within the past 2 years, or their associates if there is no controlling shareholder, the chief executive or a director of the listed issuer within the past 2 years, or their associates, in each case subject to a 2-year cooling-off period. C. The director is appointed to protect the interests of a particular shareholder. D. The director currently or within 1 year immediately prior to the date of the person's proposed appointment has or had a material interest in the principal business activity or is or was involved in any material business dealings with the group or with any connected person of the listed issuer. E. The director is connected with a director, the CEO, or any person who was a substantial shareholder in the past 2 years. Main Board Rule 3.13(6) provides further elaboration on what constitutes a connection, normally includes relatives. F. The director is an executive, including one who exercises a management function or acts as a company secretary or director of the group or any connected person of the listed issuer, subject to a 2-year cooling-off period. G. The director is financially dependent on the group or any connected persons of the listed issuer. If a listed issuer fails to meet the requirements as to the minimum number of independent non-executive directors or the qualification of the independent non-executive director, it must immediately inform the exchange and publish an announcement on the exchange's website as well as its own. The issuer then has 3 months to appoint a sufficient number of independent non-executive directors or an independent non-executive director with appropriate professional qualifications to meet the rule's requirements. 2. Audit Committee. Every listed issuer is required to establish an Audit Committee comprising non-executive directors only. The Audit Committee must comprise a minimum of 3 members, at least one of whom must be an independent non-executive director with appropriate professional qualifications or accounting or related financial management expertise. The majority of the Audit Committee members must be independent non-executive directors, and it must be chaired by an independent non-executive director, Main Board Rule 3.21. A former partner of the issuer's existing audit firm should be prohibited from acting as a member of its audit committee for a period of 2 years from the date of the person ceasing to be a partner of the firm or to have any financial interest in the firm, whichever is later. Code provision C3.2. The duties and procedures of the audit committee are code provisions under section C.3 of the Corporate Governance Code. The Audit Committee's terms of reference must include, among others, A. Monitoring the relationship with the issuer's auditors, including responsibility for making recommendations to the board on the appointment, reappointment, and removal of the auditors. B. Monitoring the integrity of the issuer's financial statements and reviewing significant financial reporting judgments contained in them. C. Overseeing the issuer's financial reporting system and internal control procedures. Code provision C2.2 further requires that the board's review of its internal controls must include a review of the adequacy of the resources, qualifications, and experience of staff, training programs, and budget of the issuer's accounting and reporting function. 3. Directors' service contracts. Shareholders' prior consent is required before the grant of a service contract to a director of the listed issuer or any of its subsidiaries if the contract is for 3 years or more or requires the listed issuer to give more than 1 year's notice or pay the equivalent of more than 1 year's remuneration on termination. Main Board Rule 13.68. 4. Directors' remuneration. Fees and any other reimbursements or emollient, including allowances and benefits in kind, paid to a director or a past director, must be disclosed in full in the annual reports and accounts of an issuer on an individual and named basis. Paragraph 24 of Appendix 16 to Main Board Rules. The company must also disclose information in respect of the 5 highest paid individuals during the financial year, under Paragraph 25 of Appendix 16. This information is, however, only required if any of those individuals is or are not directors whose emoluments will be disclosed under paragraph 24. 5. Remuneration Committee. Main Board Rule 3.25 to 3.27 require 1. Issuers to establish a Remuneration Committee with a majority of independent non-executive members. 2. An independent non-executive director as chairman of the Remuneration Committee. 3. Written terms of reference for the Remuneration Committee. And 4. An issuer that fails to comply with these rules to immediately announce its reasons for not doing so and any other relevant details. The issuer will have a 3-month period to rectify its non-compliance. The Corporate Governance Code allows for 2 different types of Remuneration Committee. In the first model, the board delegates to the Remuneration Committee authority to determine the remuneration of executive directors and senior management. In the second model, the board retains that authority, with the Remuneration Committee taking an advisory role. The minimum terms of reference of the Remuneration Committee are set out in Code Provision B.1.2. The terms of reference should be made available on the websites of the Hong Kong Exchange and the listed issuer, Code Provision B.1.3. 6. Nomination Committee. A listed issuer should establish a nomination committee with a majority of independent non-executive directors, chaired by an independent non-executive director or the board chairman, Code Provision A.5.1. The nomination committee's written terms of reference should include A. Reviewing the board's structure, size and composition, including the skills, knowledge and experience, at least annually. B. Identifying and recommending potential board members. And C. Assessing the independence of independent non-executive directors. 7. Compliance Advisor. An issuer must appoint a compliance advisor licensed by the SFC to conduct sponsor work from the date of listing until the publication date of its financial results for the first full financial year commencing after listing. An issuer is required to consult and, if necessary, seek advice from its compliance advisor in the following situations. A. Before publication of any regulatory announcement, circular or financial report. B. Where a transaction, which might be a notifiable or connected transaction, is contemplated, including share issues and repurchases. C. Where the listed issuer proposes to use the IPO proceeds in a manner different to that set out in the listed document. D. Where the business activities, developments, or results of the issuer deviate from any forecast, estimates, or other information in the listed document. And E. Where the exchange makes an inquiry of the issuer under Main Board Rule 13.10, Main Board Rule 3A.23. 8. Authorized representatives. A listed issuer is required to appoint 2 authorized representatives to act as its principal channel of communication with the exchange. These must be 2 directors or a director and the company secretary. Whenever they are outside Hong Kong, the authorized representatives must appoint suitable alternatives and provide the exchange with the alternative's contact details. The exchange must be given prior notification of an authorized representative's proposed termination of his role and the reasons for it. 9. Company Secretary. An issuer must appoint a company secretary, being an individual who, by virtue of his academic or professional qualifications or relevant experience, is, in the opinion of the exchange, capable of discharging the functions of company secretary. Main Board Rule 3.28. The exchange considers the following to have acceptable academic or professional qualifications. A. Members of the Hong Kong Institute of Chartered Secretaries. B. Solicitors or barristers as defined in the Hong Kong Legal Practitioners Ordinance. And C. Certified public accountants as defined in the Hong Kong Professional Accountants Ordinance. If a person does not have the above qualifications, the exchange will take the following factors into account in determining whether he has the relevant experience for the appointment. A. The length of employment with the listed issuer or with other listed issuers and the roles he played. B. His familiarity with the listing rules and other relevant laws and regulations, including the Securities and Futures Ordinance, the Companies Ordinance, and the Takeovers Code. C. Relevant training taken and or to be taken, and D. His professional qualifications in other jurisdictions. 10. Board diversity. Under the Corporate Governance Code, a listed issuer's board should have a balance of skills, experience, and diversity of perspective appropriate to the requirements of the issuer's business. Under the listing rules, the nomination committee or the board of a listed issuer should have a policy on board diversity which, or a summary of which, should be disclosed in the issuer's corporate governance report, Main Board Rule 13.92, as to the meaning of diversity, and note to Main Board Rule 13.92 set out in the following guidance. Board diversity will differ according to the circumstances of each user. Diversity of board members can be achieved through consideration of a number of factors, including but not limited to gender, age, cultural and educational background, or professional experience. Each issuer should take into account its own business model and specific needs and disclosure and rationale for the factors it uses for this purpose. 11. Website publication of certain documents. The main board listing rules require certain documents to be published on the websites of the listed issuer and the exchange. These include: A. An up-to-date consolidated version of its constitutional documents must be published on the issuer's own website and the Hong Kong Exchange's website, Main Board Rule 13.90. And B. The procedures for shareholders to propose a person for election as a director must be published on the issuer's own website, Main Board Rule 13.51D. The Corporate Governance Code requires publication on the websites of the issuer and the exchange of A. An up-to-date list of directors identifying their role and function and whether they are independent non-executive directors, Code Provision A.3.2, and B. The terms of reference of the issuer's nomination, remuneration, and audit committees, explaining their roles and the authority delegated to them by the board, Code Provision A.3.2, A.5.3, B.1.3, and C.3.4. Documents published on the issuer's and the Hong Kong Exchange's website should be in both English and Chinese. 12. Environmental, Social and Governance (ESG) reporting. Appendix 27 to the Main Board Rules set out a guide for environmental, social and governance reporting, which is a requirement under Main Board Rule 13.91. The board has overall responsibility for a listed issuer's environmental, social and governance reporting. It must evaluate and determine the listing issuer's environmental, social and governance related risks and ensure that an effective environmental, social and governance risk management system is in place. Management should provide a confirmation to the board on the effectiveness of such system. There are two levels of disclosure obligations. Listed issuers must state whether or not they have complied with the Comply or Explain provisions of the Environmental, Social and Governance Guide, but may choose not to report on the recommended disclosures, although the exchange encourages it. If there is any deviation from any of the Comply or Explain provisions, reasons for such deviations should be provided in the Environmental, Social and Governance Report. The Environmental, Social and Governance Guide sets out two key subject areas for reporting: environmental and social. Governance is addressed separately in the Corporate Governance Code set out in Appendix 14 to the Main Board Rules. There are various aspects under each area, and each aspect sets out the general disclosure requirements and the key performance indicators, KPIs, to measure environmental, social and governance performance. The Environmental, Social and Governance Guide is not comprehensive, and issuers are encouraged to identify and disclose additional environmental, social and governance issues and key performance indicators relevant to their businesses. They may adopt international environmental, social and governance reporting guidance for their relevant industry or sector if it includes disclosure provisions comparable to the Comply or Explain provisions of the Environmental, Social and Governance Guide. An environmental and social governance report must be included in an issuer's annual report or in a separate report published in print or on the issuer's website. Regardless of the format adopted, the Environmental, Social and Governance Guide report must be published on the websites of the exchange and the issuer. An issuer's environmental, social and governance report must cover the same period as its annual report. Where the environmental, social and governance report is not included in the annual report, it must be published as close as possible to, and no later than 3 months after the publication of the issuer's annual report.